Welcome back to the exchange. When it comes to buying the dip or riding the highs, our next guest is taking the road of the lower price stocks. He's got three laggards he's scooping up right now because he says the price is right. With us is Jeff Kilburg, founder and CEO of KKM Financial, a CNBC contributor. Now, Jeff, I know you know that just because the stock is down doesn't mean it can't keep going down. So what is it about these three that we're going to talk about that you like?
Well, David, nice to see you in the middle of the day. But it's interesting. These three names, two of them are essential names. We've just seen a fall from grace, and you're absolutely right. You don't want to catch a fall at night. But at this moment in time, either the government coming into Intel or Warren Buffett coming into United Healthcare, there's a reason to try and buy this dip. Okay.
So which, there's three here. United Healthcare, Intel you just mentioned, and also Tesla.
Yes.
Which, to be fair, is off, 18% this year. Obviously, we've seen it worse. It is, it's still over $1 trillion market cap. What about Tesla makes it attractive right now?
Well, I think Tesla is really coiled on a chart if you look, David. And right now, it seems like the imminent breakout is to the upside if and only if they can nail the robotics and this pure AI play that they are. So I get excited about Tesla, but transitioning quickly into United Healthcare, I think that's really interesting, David. It's traded to start the month of August. It started trading with a forward P of 14. That was the lowest it's been in about 5 years. And when you see that type of investment from 5 million shares of Warren Buffett, I like owning United Healthcare. We saw a mass exodus, but there's a back and fill opportunity, David, believe it or not, up to $442. It's been absolutely on fire the last 10 years. 9 out of 10 years. Yeah. United Healthcare has been up, but it's been really tough sledding lately.
Yeah, there's been a brutal year, as you point out. Stocks have been cut in half, obviously, with any number of earnings revisions. They got Medicare Advantage wrong, a lot of other things. Obviously, the stock did react positively to that news about Buffett. And finally, we've been talking a lot about Intel, but there are a lot of question marks there in terms of the ability of that company to actually earn money. What gives you some confidence, Jeff?
Well, I think Intel, due to the fact that it's an essential American chip maker, but it's been volatile, to your point, David. You look at 2022, down 46%, 2023 up 94%, 2024 down 59%. So, yes, this wild child is finally finding some stabilization due to the SoFi investment, but also the U.S. government. But I do have a little bit of stress and complexity due to the fact that I'm positive and optimistic on Intel. I just bought more. But if you remember the Sopranos episode where Tony takes an interest in Artie Bucco's restaurant. Remember that, David?
Yeah.
Well, there's a lot of complexity in that. That restaurant did well, but all of a sudden the U.S. government owns 10% of Intel. This is unlike any other situation. This isn't the GM bailout. So it's not going to be a straight line up, but I do think you have the ability to go back and test $38 because Intel is one of those fallen angels that should still be essential. Yeah.